Since the 2020s started, it has never been a quiet year in the American and Canadian stock markets. Take 2021 for example. Aside from a few minor pullbacks, it was mostly a year of record highs and eye-popping returns. For my Canadians out there who deal in quarts of maple syrup and pounds of poutine, the Toronto Stock Exchange had a record run of around 21.7% annual return in the year of 2021. Whereas down south of the border, the Dow Jones clocked around 18.65% in 2021, the S&P 500 and even mightier 26.89%, and the NASDAQ a close second with 21.4%. However, now that the easy money has been made, for the most part, when we think about the overall market, 2022, some experts believe will be the year of volatility and stock pickers market. Let's assume that it turns out to be one of those years where you need to know what you're doing in the stock market rather than just loading up on the latest hype trends like the Supreme Retirement Plan. That's a real thing, look it up friends. Welcome Internet, this is Tahmid from Tahmid Talks, and today we discuss the top 3 biggest risks in the stock market in 2022. Number 1 has to be a super strain of sorts of the coronavirus. Now I'm no health expert, but those who understand what's going on suggest that we may have gotten lucky with the Omicron in the sense that it is likely less fatal than the last dominant strain, the Delta. This gives governments and businesses around the world more leeway to keep open and stay away from indiscriminate all-around shutdowns which we saw earlier like March 2020 around the world. And the longer they can keep businesses and governments open, the more likely we get higher economic performance. As you know how it goes, lower economic performance would mean lower profits, which would mean lower stock prices. You get the picture. There are a lot of eyes on variants of concerns floating around, and the concern is that different potential variants might merge to produce some sort of vaccine, an antibody resistant superstrain like a megacron or something of that nature. This would definitely finally force stock markets to correct even more sharply to the downside once again. The second key risk is to think about interest rates and inflation, which I understand are two things, but they're interconnected. Believe it or not, there are a generation of kids out there, including myself, who have never traded or invested during a real inflationary period. We are just ZIRP, a fancy acronym for zero interest rate policy, babies, and know better of how to deal with the tough environment for stocks when interest and inflation rates are rising rapidly. Now the jury is still out on the overall impact of such a period on the stock markets, but it would be fair to say that it is probably net neutral. Some particular corners of the market, such as commodities and especially stocks of companies that are in the primary sector of the economy, meaning they extract resources and sell them, might do quite well if we get rampant inflations. While other businesses who are more in the secondary sector and rely on buying these commodities to produce their widgets and the different things they do may not do so well. Also, highly indebted companies with large amounts of debt may suffer in an inflationary period if interest rates rise faster than any of us currently expect. The sage of Omaha, Warren Buffett, once quipped that in an inflationary period, you really want to own companies that have two characteristics: capital light, meaning they don't require much capex or investment to keep up production, and those capable of passing on rising costs to their consumers. Now it's up to you to decide how hot inflation will run, how high interest rates may go, and if you want to rebalance any of your portfolio for those realities if they do occur. The third and final risk you may want to consider or keep an eye on is rising geopolitical concerns. China and the USA are facing off on the world stage with a bang, like the final fight scene of an anime. Other actors such as the EU and Russia want a piece of the action pie, so it's unlikely that 2022 will be a quiet year for global geopolitics. And big geopolitical events are very capable of moving entire stock markets to the up or downside. Just take a look at the Brazilian or the Turkish stock markets recently. adverse events, especially when the entire currencies are devaluing and economics are tottering from a health crisis of a generation, as well as political uncertainty, lack of good leadership, and you could get emerging market stocks which are already cheap get even cheaper, creating downside risk and consequently the buying opportunity of a lifetime if you can stomach that level of volatility and risk that comes with geopolitics. So there you have it, from health to geopolitics. The stock market will likely be subject to a lot of different head and tailwinds in 2022. I look forward to how the year pans out, even if it is very volatile here in these stock markets in my home base of Canada and almost home market, the American ones, as well as other bets in emerging markets. Happy trading and investing to all of you. Thank you for listening, and as always, please do subscribe, like, and comment to support more content like this on YouTube.